If you've been struggling with day trading recently, or you just want to get started and you don't know the correct steps to take, well, this video is made for exactly you. My name is Tukhi, and at the time of this recording, I have been trading options for a little over 4 years now. And for this video, I'm going to be creating a full guide, a full video on how to get started trading, slash, going to be covering pretty much all of the necessities that you're going to want to prioritize when it comes to getting started trading within these markets. Now, specifically, I'm going to be covering getting started trading within the stock market, but all of these principles that I'm going to be mentioning will, relate to whichever market that you're trading if you are not trading the stock market. So going to be doing a full guide. This video is going to be longer than usual, so if you have a fried brain and you can't watch a video for longer than 1 minute, I recommend that you just click off now, because this video is going to be a bit longer. But for the ones that do really want to win, do want to learn a high income skill that can genuinely change your life, then stick around. This video is perfectly for you. Like I mentioned earlier, no edits, no nothing, full guide. Let's get started. So how to get started trading. Like I mentioned, my name is Tukhi. I've been trading options for a little over 4 years now, and I have been teaching traders since 2022, sharing all of my analysis and trades, just to let you guys know so you don't think I'm some random person on the internet. So let's go ahead and get started. So how to get started trading. Now, one of the most important things that you guys want to keep in mind when it comes to getting started is you need to be the right person. You need to have the right mindset when it comes to all of this, because if you're not, if you are impatient, if you don't understand that this is going to all be a process, then don't even get started in the first place. Like I mentioned earlier, this is a very powerful high income skill that can change your life. Not many people have this skill of trading. The reason that this skill, the reason that trading is so powerful, it is pretty much infinitely scalable. There is no cap to how much you can make, right? So when I say be the right person, you really need to have the correct mindset going into this. You need to be a beast. You need to be a king. You need to be confident in yourself that you're able to go into something, stay consistent, disciplined, and persistent with that, and achieve slash continue to get better with that certain skill. Obviously, that skill being trading. So if you're not someone that can stick with something, that wants to put in the time to better themselves, don't even get started with this in the first place. This isn't something that you can just get rich with in a week, 2 weeks, whatever the case may be. Understand that, right? So before you get started, before you dive into anything, make sure that up here everything is perfect first, because that's going to be one of the biggest things going into trading, and you guys will see later on why I say that. So moving on to the next slide. Let me just double check, and moving on to the next slide. So now that you know if you are the right person, if you know that you have the correct mindset going into this, now you want to get started downloading, the correct trading apps. And those apps are going to consist of your brokerage apps, of your charting apps, of your news apps, things like that. But most importantly, I want to cover the brokerage. And if you don't know what a brokerage is, a brokerage is pretty much where you hold all of your trading capital slash execute all of your trades. So through the brokerage, that's where you are going to be placing all of your trades, obviously making all of your profit through your trades, etc. Most brokerages, especially if you're trading with the main ones such as Webull, such as Robinhood, which are the ones that I recommend, those are trusted legal brokerages, right? So don't think that these are just random companies, random apps that can do sketchy things, steal your money, whatever the case may be. These brokerages are safe because I know many people going into trading, they worry about these brokers, stealing their money or stealing the information, whatever the case may be, especially if you have to put your social security information and stuff like that. They get a little hesitant. But just to let you guys know that these brokers, these apps, they're all going to be trusted, all obviously legal and safe apps, right? Now, in terms of the apps, in terms of what apps you actually want to get started with, like I had mentioned earlier, the trading apps slash brokerages that I would recommend are either going to be Webull or either going to be Robinhood. Now, like I mentioned, these are brokerages in which you are going to be able to place all of your trades through. Whether you're going to be day trading obviously meaning you are entering and exiting within the same day, or swing trading means you are placing a trade on one day and then you are either exiting that trade the next day, the next week, whatever the case may be. So a swing trade is pretty much just a longer trade, right? So these Robinhood or Webull, that's pretty much where you're going to be executing all of these trades. Now, the reason that I obviously recommend both is because they're pretty much both very beginner friendly and both pretty much provide everything that you're going to need in terms of getting started trading. Now, the one pro that I would honestly say that Webull has that Robinhood does not is that Webull has what's called demo trading or simulation trading. Now, it's pretty much exactly how it sounds. They simply just have an option on Webull where you're able to demo trade, meaning you're able to trade within this live markets, but you're trading with simulation money, meaning you don't have to risk a single penny of your own, right? So that's the cool thing. And I'm actually going to get into paper trading later on, but paper trading is going to be a huge resource. That's why I, say that that's a plus that Webull has that Robinhood doesn't. So honestly, I would honestly recommend you guys to go with Webull. Now, Webull is going to be on the App Store, going to be on the Google Play Store, or going to be on the website. They have a Webull website, or you can just download it on your desktop, whatever the case may be. Whatever you prefer. I know everyone's obviously different when it comes to these apps, but Webull and Robinhood are pretty much everywhere. So that's going to be that. Now, in terms of the other apps, right, these are obviously going to be our brokerages. There are also going to be TradingView. Now, TradingView is also going to be an app in which you can download on your phone, and it's also going to be a website which you can literally just go on how I'm exactly doing right now. And this is pretty much where you're going to be doing all of your charting, all of your technical analysis. It's called TradingView. Now, through TradingView, this is the main website slash platform that I am doing all of my technical analysis through. Technical analysis, obviously, reading price action, drawing our key levels out, understanding things like that. So TradingView is going to be another key and another important app slash website that you're going to want to get familiar with when it comes to getting started trading. So there's going to be TradingView, Robinhood, and Webull, whichever you prefer. Realistically, I recommend Webull since it does have paper trading. And then there's also going to be Forex Factory. Now, Forex Factory is going to be right here. Forex Factory. So Forex Factory is actually going to be telling us all of the news slash data sets that are being reported within the current week, within the current day of whenever we're trading. Now, this is going to be very important, and I will get into this later on into the video. So we have TradingView, Forex Factory, and then obviously our two brokers, which are going to be Robinhood and Webull. Now, moving on to the next slide. So after we have our trading apps and our trading websites loaded up, downloaded, whatever the case may be, we now want to get familiar with terms, with beginner terms, with trading slang, things of that nature. Now, if you aren't in the Discord, I highly recommend joining. There is a bunch of free resources in which you guys are able to utilize. Most importantly, what I want to go over right now is going to be all of the trading terms in which you guys can utilize that I have available in the channel. A ton of terms, also a bunch covering supply and demand, how to trade supply and demand. But obviously, like I mentioned, there are a ton of terms in which you guys are able to come and look at, utilize, and learn. But a couple of the main ones that I want to go over are going to be starting with a call and a put. Now, a call and a put are going to be what's involved in options trading. Now, if you guys don't know what options trading is, we're going to get into it very shortly, but it is a style of trading that's pretty much a lot more high risk, high reward. Now, this is what I trade. I trade options. You trade stock options. So obviously, like I mentioned, it's pretty much just a more high risk, high reward way of trading stocks. So anyways, we have a call and we have a put. Now, just to make it as simple as possible, you buy a call when you are bullish on price or when you think price is going to go up, and you buy a put when you are bearish on price or when you think price is going to go down. So that's pretty much how options trading works. There's two ways you can trade it. You can either trade to the upside or you can either trade to the downside. Obviously, if you are bullish on a stock, like I mentioned, you are buying a call, and if you are bearish on a stock, you are buying a put. Now, if you don't know what bullish and bearish means, bullish is another term slash slang within that traders use. So bullish means that you as a trader or just a trader thinks that the stock is going to go up, right? That's what bullish means. Now, bearish means that you as a trader or just any trader in general thinks that the stock is going to go down, right? They think that the stock has a negative future or negative potential, whatever the case may be. So whenever you hear someone say, "Oh, I'm super bullish on this stock," that means that they think that the stock price is going to go up and they believe that the stock has a positive future. If someone says, "Oh, like I'm super bearish on a stock," that obviously means that they believe that the stock price is going to go down and they believe that the stock has a negative future. Now, those are just going to be a couple of trading terms slash slang. Like I mentioned, join the Discord if you aren't already. There are going to be a ton of trading terms slash slang that you can get yourself more familiar with. Link will be in the description. Now, moving on to the next slide. So after we kind of get ourselves more familiar with learning certain terms, learning slang, now we want to start paper trading, right? We want to start paper trading and actually starting to take action within the markets, which is going to be most important. So as I mentioned earlier, this is where Webull is going to be clutch for us. This is where Webull is going to be our best friend because, like I mentioned, Webull has paper trading. Robinhood does not. So that's why Webull is going to have a higher advantage over Robinhood. Obviously, due to the fact that Webull is going to be offering paper trading. Paper trading is going to be a huge resource for beginner traders. It's just simply going to get you more familiar with understanding certain terms, understanding how to trade, just understanding everything, right? It's just going to be a huge practice resource. So that's also why I would recommend Webull over Robinhood when you are starting out. So now that we have everything, the base things, we want to start paper trading slash actually dipping our feet within the market, because realistically taking action and actually trading is what's going to help us the most, because we're actually going to understand what we're doing wrong, what we're doing right, and how we can move forward to do better, right? So now this is why I also have Webull loaded up here. Oh, well, okay, cool. So once you're loaded up on Webull, it's going to look super confusing. But that's why I want to kind of cover things real quick and kind of better explain to you guys, because also we're going to be trading options, which is a different style / different way of trading stocks. So I want to cover a couple of things real quick. Let me make this just a bit smaller. Okay, cool. So now that we are on Webull, it's going to look pretty similar throughout most brokers, but you can see here that we have what's called our option chain, or you can see right here, it says options. You have our charts, everything. Let me go ahead and just maximize this. Now this is what's called an options chain. This is where we're going to be able to enter into our positions by trading options. Now, typically, when you're investing regularly, when you're trading stocks regularly, you would only just invest in that stock, right? There would only be one option for you to invest in, and that would obviously be that stock. But for options, you have multiple different options in which you can actually enter from, right? So you're not just limited to one. You're not just limited to one price. You have multiple different options, and each option is priced differently. So right here, I'm going to use SPY as an example. Also, like I mentioned earlier, we have our calls and we have our puts. So let's say that we are bullish on SPY. We think that price is going to go up. So we would buy a call for SPY. We would buy a SPY call. Now, here are the things that we want to focus on now, or that you guys should focus on as a beginner trader. So the key terms that we have now are going to be the strike, the bid, the ask, and of course we have the other terms, but I just want to focus on these three for now. Now the strike, this is going to be the strike price. Now the strike price is pretty much the price that's closest to the actual stock that we are trading. So in this case scenario, we are trading SPY. Now SPY is trading at, let's see, SPY closed at 526, right? Obviously the market is closed right now, but you can see that the strike prices are within the vicinity of 526. So if we think that SPY is going to go up, we want to buy a SPY call at the 526 vicinity area. We either want to buy the 525, 526, 527, 528, or even the 524. Now, the reason that I'm giving you multiple different options to buy from is because each option is also priced differently. So you want to take that into consideration, because obviously everyone is going to be trading with different capital, right? So you want to make sure that you are buying in with what's reasonable to you. Now, this is what's called correct position / size management. I will get into this later on into the lesson, but this is just an example of having correct size management is only entering with a portion of what's actually in your trading account. Many traders will enter with the full amount that they have in their trading account, and that's how they blow their money. That's how they, completely lose everything. You need to only be entering with a small percentage of what's in your trading account, because if that trade does go wrong, if you're only losing a small percentage of your portfolio, right? And as traders, we need to understand that anything can happen within the market, and losses are obviously bound to happen as traders. It's completely normal. It just comes down to how we actually manage those losses. And the way we can best manage those losses is by A, having correct size management and having correct risk management. So obviously we have our strike price, which, like I mentioned, those are going to be the numbers that are going to be closest to the actual stock that we are trading. So typically, if you are bullish on SPY, like I said, SPY is trading at 526. So you would realistically want to focus on, the 524, 525, 526 or higher, right? And then for the puts, we have our puts position, our put contracts. So these are obviously what we are going to be getting into if we are bearish on a stock, if we think that price is going to be moving to the downside, right? So we have our calls and our puts. If we think price is going to go up, we're going to be getting into calls. If we think price is going to go down, we're going to be getting into puts. So we can also make money when the stock is moving down, right? Pretty cool. Now we have the ask and the bid. So this is pretty much kind of just like Craigslist, I guess, or like buying stuff online, right? You have the asking price, in which is pretty much the listing price, and then you also have the bid, which is pretty much your price, essentially, the price that you want to get in at, or the price that most other traders are looking to get in at. Now, the bid and the ask, obviously, they're going to be trading pretty similar in terms of price. Obviously, you can see that the ask and the bid, the ask is 3.89, the bid is 3.81. So not too far at all. Now, one of the main reasons that a lot of traders would enter in at the bid would to be to enter in at the lowest point possible, obviously before that trade does move in their direction, right? So they can catch the most profits possible. So that would be one case scenario. Now another case scenario is just by simply getting a discount on their entry, right? Obviously, if you enter in at the ask, you're entering in at 3.89, but if you enter in at the bid, you're entering a bit cheaper at 3.81. Now, if you're entering with heavy sizing with multiple contracts, that 3.81, that 8 cents is going to be a big difference, right? And the reason that it's going to be a big difference is because you can buy more than just one option contract, right? Let's say that you're buying 2 option contracts, then your profits, whatever you would profit on that position, you would times it by 2. Now, keep in mind, this is going to be a bit confusing to kind of understand at the beginning, but you'll get used to it. So each option contract that we trade, or just every option contract in general, has 100 shares of the stock that we are trading multiplied by the actual option price. So pretty much to kind of narrow that down, when we see the ask and the bid, always we want to times it by 100. So in this case scenario, we see that the ask is 3.89. Now that doesn't mean that the full option contract would cost $3.89, because we would have to times it by 100, due to the fact that every option contract has 100 shares of the stock included within the option contract. So 3.89 times 100 is going to be $389. Now that's how much one option contract would cost of the 522 strike price if we were buying calls. Now let's say we were buying let's say we were buying the 526. Now we see that the 526, the ask for the 526 is 1.13, 1.13. So we would want to times that by 100. Then the total cost of our position would be $113 for one option contract. And if we were buying 2 option contracts, it would be $226, right? Because we are doing 113 times 2, since we are buying 2 option contracts. Obviously, if we were buying 3, or if we were buying 4, etc., you would just times the amount of option contracts by the actual total cost of how much the options cost. And the way that you can tell by the option price is pretty much just looking at the ask or the bid and then timesing it by 100. Now, you're not always going to have to times it by 100 because most brokers, if not all brokers, are just going to have it automatically placed, like automatically set up. So let's say you click on the 526 1.13 and then you were to come here, you can see that, let's see, you would come down, unlock to place order, 1.13 here. So it would look a bit different when the market is open. But what you would do is you would do here buy, and then you would see the amount of contracts that you would want to buy. So right here it's set at 10. So let's say we would only want to buy 2 option contracts. Then we would just type in 2, and then we would click unlock to place order, and then it would place the order for us, right? So that's going to be that. Obviously, they also have like a turbo trader. They have like different ways that you can enter, different ways that you can trade on Webull. And obviously, every broker is going to be different. But in terms of the option chain, in terms of what we're looking at right now, this is going to stay the same across pretty much all brokerages. But I wanted to make sure that we were able to cover this and I was able to go over the basics because this is what you guys are going to be looking at every day or pretty much every trade is this options chain, right? So keep that in mind. So that's going to be the basics. We have the strike price, we have the ask, we have the bid, which we went over. And then keep in mind the ask and the bid, most of the times, if not all of the time, realistically, you're going to want to be entering at the ask because the bid price, just like anything else, or just like anything else, if you were to place a bid, it's not 100% guaranteed to be accepted, right? A bid is pretty much just like a bid, right? You're just placing a bid in hopes for it to get accepted. If it gets accepted, obviously it gets accepted. If it doesn't, then oh well, it was just a bid, right? That's exactly how it works with trading. You enter in at the bid price. Now, if the bid gets accepted, your trade then gets filled and then you'd get entered in. But obviously, if your trade does not get filled, you will not be entered in, and obviously, you're not going to be in that trade. So that's why entering in at the ask is going to have a lot higher of a chance of you actually filling that position, entering in, and B, it's going to be a lot faster for you to enter to make sure you're actually catching that whole move, because you don't want to enter in and not get filled and have that trade be moving on you and you potentially miss out on profits. And pretty much what I mean by a trade getting filled is every time that you are entering in a trade, your position has to get filled, meaning if you are entering in a buy position, there has to be a seller for every buyer, right? And if there is not a seller for a buyer, or if there is not a buyer for every seller, your position will not get filled, right? Meaning if it doesn't get filled, obviously your trade will not get accepted. If it doesn't get accepted, you're obviously not going to be making any sort of profits. So that's why knowing where to enter in terms of the ask/bid is going to be important. And also knowing how to enter is going to be important because you're going to have your limit and you're going to have your market. Now, these are also going to be some more trading slang/terms that you guys are going to get familiar with. Now, these are going to be different ways that you can actually enter into your positions. Obviously, you have your limit and you have your market. Now, market is pretty much entering in at whatever price the market is listed at. So it's just pretty much entering in at whatever price. Now, this is what I'm typically doing the most, just to make sure that I'm entering in at the fastest point possible before price does have that move, and I can make sure that I do catch the whole move/whole profits, right? But let's say that you are entering in at limit, then that means that you want to wait for price to reach a certain point before you get entered, right? Obviously, that's not the case for markets. But for limit, if you kind of want your position to breathe a little bit more, you want your entry point to be a little bit more farther out from where it currently is, then you would probably enter in at limit, right? And obviously at limit, then you would place what price you would want your order to get filled in at. In this case scenario, you can see your limit price would be 1.13. Now that 1.13 means if this option contract reaches 1.13, obviously it is right now, then your position will get filled, right? But let's say it was at 1.15 or 1.16. Then in that case, it wouldn't enter immediately because your position is only triggering the entry at 1.13 or below. So if it is higher than 1.13 and continues to move higher, you're not going to get that entry. But let's say you just enter at market, then it's just simply going to enter you in at 1.13, 1.14, just instantly enter you in. But if you were to enter in at limit, it would probably take a couple of seconds, even a couple of minutes for you to actually get filled / completely entered into that position. So that's going to be that. Now, the last thing that I want to cover when it comes to these options position or options trading or option contracts is going to be that there is going to be an expiration date for every single option contract. Now, that's not typical for, most trades or most investments. If let's say we're like trading, investing in Tesla or investing in Apple, typically there's no expiration dates for stuff like that. But when it comes to options trading, that's why it's a little bit more higher risk, higher reward. Is because we obviously don't have forever to hold on to these positions like we would if we were just investing into them, right? Now, for the expiration dates, there are many different expiration dates that we can trade with or trade at. Now, as day traders, we want to trade with the closest expiration date. Obviously, due to the fact that since we're day trading, we're only going to be entering in and exiting within the same day. So there's no need to have our expiration date further than the date that we're currently on or the day after, right? Also, keep this in mind. The further the expiration date, the more expensive your option contracts are going to be, due to the fact that you have more time to actually hold those option contracts and you have more time for your analysis or thesis to be correct, right? But for the expiration dates that are on the same day or that are on the day after, those option contracts are typically going to be cheaper, right? So all options contracts are going to move differently. All option contracts are going to be priced differently, and pretty much most option contracts are going to have different expiration dates, right? So that's going to be that. I have a whole in-depth video, multiple in-depth videos covering more about how to actually understand / trade options on the YouTube channel. So I highly recommend checking those out if you haven't already. But this was a quick, in-depth kind of guide. So moving on to the next slide. So that's also going to be covering paper trading, right? / taking action. And also, like I mentioned earlier, taking action is going to be the biggest thing in terms of us growing, in terms of us understanding our mistakes, our strengths, whatever the case may be. So, how are we going to be able to grow? How are we going to be able to learn if we're not actually taking action, right? So that's why doing it, being on the charts, trading, literally just not staring, but just like seeing these things through is going to be a huge game changer for us because we are actually observing it, right? We're putting it into our head. The more we learn it, the more we see it, the more comfortable we are going to get with it. The more comfortable you are within the market, the more you will understand. The more you will understand, the better trades you will take. The better trades you will take, the more profits you will make. Now, moving on to the next slide. So now we have technical analysis. Now, I covered TradingView earlier. Now this is going to be one of the key apps slash websites that I had mentioned earlier. Now, TradingView is, like I mentioned, where we are going to be doing all of our technical analysis. Technical analysis in terms of drawing out our key levels, looking at the charts, reading candles, understanding price action, things like that. Now, if you have no idea how to understand price action, how to read it, whatever the case may be, I'm going to go over it shortly, but I do want to go over a couple of things first. So understand that the candles slash the charts are pretty much always telling us a story, right? They're always telling us a story, and the more familiar we can get with the story, the better we'll be able to obviously understand it or understand what is going to happen moving forward, right? So that's why I'm always going to always preach being on the charts and just getting in that screen time on the charts, because the more you observe these things, the more you get familiar with it, the more you're going to get comfortable with it. And the more you get comfortable with it, as I said earlier, the better trades you're going to take, the more you'll just understand. You know what I mean? So understand that the charts are pretty much constantly telling us a story. Now, I'm going to go ahead hop into a slight little price action lesson, and then we'll move on to the next slide. So we have our candlesticks here, right? Now, obviously, our candlesticks, like I mentioned, are pretty much always going to be telling us a story, pretty much just telling us kind of what price is doing within that certain moment. Now, on the charts as well, there are multiple different time frames that we can look at the charts. Now, for example, we have like the 5-minute, the 1-minute, 30-minute, etc. So say we like switch to the 1-minute. Now, what this means is every candle that we see, like a candle like the squares, you guys obviously know what I mean. Every candle that we see represents 1 minute of time, 1 minute of time movement. And obviously, we can see regular candles are going to be green and red, but I changed my charts. I changed the color of my candles. But you guys get the point. The green candles on my charts are going to be blue, and the red candles are going to be black. So we can obviously see each candle is either going to be showing strength, either going to be showing some sort of weakness, or we're going to be seeing levels being created within the charts, such as some type of support being created right here. You can see we have a support level. Price comes to the support level. It respects this level, rejects off of it, and then we get a push slash bounce to the upside off of this support, right? So pretty much the charts are always going to be telling us a story. And like I mentioned earlier, the better we are able to understand the story, the more we're able to get a better idea of what is likely to happen moving forward. So that's that. But as I mentioned, each candle is going to be letting us know what price was doing within that duration of time. So for example, if we were on the 1 minute, like I was just showing you guys, each candle is representing 1 minute of price movement. Now, we also have the wick of the candlestick body, right? We have the open, which starts at the very bottom, and we also have the close, which starts at the top. That means that at the open, at the start of that 1 minute, price opened up here, And at the close slash end of the 1 minute, price closed here, right? Or ended here. And the wicks show where price got to at the highest point and where price got to at the lowest point. So that's what the wicks are indicating, the highest point and the lowest point within the charts. Now, the wicks are very important, keep that in mind, because the wicks are also going to be letting us know different confirmations or different kind of simple as that, different confirmations on what's likely to happen moving forward within the next candle, right? Because the wick will sometimes show excessive amounts of strength or excessive amounts of weakness. And if we see that, that is a very big sign that price is likely to continue that excessive weakness slash excessive strength. Excessive weakness just being large amounts of selling. So if you get large amounts of selling within the market, that obviously means that price is likely to move to the downside. Obviously, vice versa, if we are getting excessive strength within the market, that means that we are getting lots of buying. If there is lots of buying within the market, our price is obviously going to start to move to the upside. Now, that's going to be that for the green candle. So keep in mind that the actual candlestick body is the actual rectangle, and then the wicks are going to be the high and the low of the actual candlestick bodies. So this is going to be the green one. Now our red candles, which can also be considered as our bearish candles, are going to be a bit different, because rather than the candle opening up at the bottom, it is now opening up at the top, right? Because this is a bearish candle, meaning price is moving to the downside. So at the beginning of that 1 minute, the candlestick body opened up at the top and closed at the bottom if it was a red slash bearish candle, right? Obviously, it would just be vice versa, just like we covered if it was a bullish slash green candle, but you guys get the point, right? And then obviously, like I mentioned multiple times, we have our wicks, which indicates the highs slash lows of where price got to within that duration of time of whatever your candlestick time frame is on. Obviously, I've been referring to the 1 minute, so that's where price got to the highest point within that 1 minute period of time. Now, just a quick example I can show you guys. You can see, let me just go here. We have let me find a good example. So I can do something like this candle right here, this blue candle that I'm trying to circle, ugly circle. Okay, so that blue candle inside the circle, you guys obviously see that there is a wick on the top, which indicates the highest point in which price reached within that 1 minute period. We have the bottom wick, which means that is the lowest point in where price reached within that 1 minute period. And then we obviously have the candlestick body. The bottom of since this is a green candle, the bottom of the candlestick body indicates that's where the 1 minute opened up. And the top of the candlestick body is showing that's where the 1 minute candle or the 1 minute price closed, right? So that's going to be that. And then obviously vice versa, you can see we have our red candle or the black candle in this case scenario. You can see that we have the black candle showing a strong wick to the downside. You can see that we really only have a top wick. And as I mentioned, this is what would be considered a wick showing excessive weakness or excessive selling. And typically when we see candles like that, the move or the selling pressure is likely to continue. You can see in this case scenario, we got this candle with a large wick as if it was pushing price down, you guys can see how large this wick is and how small that candlestick body is. So that also is another sign, and then we continue to get that followed move, obviously because we started to get signs of excessive selling from this wick. So that's another way that we understand price action, is by simply reading the candles, right? The candles is how we understand price action, because as I mentioned earlier, the candles are pretty much telling us a story. So the better we're able to understand these candles, the better we're able to make decisions on the charts. The better decisions we make, the better trades we make, and the better trades we make, the better / more profits we take, right? Very, very, self-explanatory. So that's going to be that. Now, moving on to the rest of this, as I was mentioning, the wicks, right? So the wicks are going to be very important because it's pretty much showing us signs of A, excessive buying, or signs of B, excessive selling. And the market moves based off of buying and selling, right? It moves based off of supply and demand. That's how the market moves, supply and demand. So if there are large amounts of buying, if there is high demand for price, obviously meaning if there is high demand, lots of people are going to be buying in. So if lots of people are buying in, that's just causing more momentum for the stock. More momentum means more volatility. More volatility means the price is going to move better in our direction, right? But anyways, we can see that we have different wicks in different candlestick bodies. Now, number 2 and number 1 are going to be my favorite in terms of, the most bullish wicks that we can look at, or the strongest bullish / buying wicks that we can look at. Obviously, when we see things like that, when we see things like this, moves or the momentum is likely to continue. So that's why we even look at stuff like this in the first place, because stuff like this are signs, they're confirmations for what's likely to happen next. So here are just examples of candles / wicks that would be, strongest, or that would be most bullish, right? Now, vice versa, just for our selling candles, we have obviously same exact thing, but the wicks for our selling / bearish candles. Now, the number 1 and the number 2, these are going to be my favorite bearish / selling candles as well, or look of selling candles, obviously due to the fact that we have the strong wick as if it's pushing price to the downside. That's like another way that I look at it too, is if the wick is larger than the actual candlestick body itself, that's another big sign as well. But in this case scenario, we can see that the wick is pretty much, it's like pushing price down. That's like how I look at it. Or for the green one, it's like it's pushing price up. The wick is pushing price up. So that's, one way that you can kind of read these wicks, or at least that's how I kind of read them / understand them. Now, moving on, we have our doji candlesticks. Now, these candles are, I wouldn't say rare, but they're not as common as other candlesticks. Now, these candles aren't really even going to include a candlestick body. They're pretty much just going to be like lines, right? And when we see stuff like this, these are typically signs of indecision or signs of a reversal within the market. So keep that in mind. These are doji candlesticks. They have their own wacky names to it, but I just call them doji candlesticks or doji candles. And when they are formed within the market, you will know and see exactly what I'm talking about. They're pretty much just literal lines with no candlestick body. So that's going to be that. Just a quick little breakdown on price action. Now, moving on to the next slide. Next slide is going to be psychology / emotions. As I mentioned earlier, as I was talking about this earlier, this is going to be one of the biggest things that you're going to want to get comfortable with, that you're going to want to, master when it comes to your trading. Because if you are emotional when it comes to your trades, you're emotional when it comes to holding your position, you're not going to be successful whatsoever, right? You need to understand how to best manage the trade, how to best be calm, and how to best simply just understand what you're doing, right? Because in the beginning, things are going to be a little bit shaky, and that's completely normal. But the more you're on the charts, the more you are taking action, the more you are learning to refine things as best as possible, the more your psychology is going to get built up, the more your emotions are going to be more put in place. And the more those two things are going to be put in place, it's just going to be a huge game changer for you. It's going to add a lot more confidence, and it's going to add a lot more calmness as well when it comes to your trades, which is going to be two huge traits that are going to be incredibly beneficial that you're going to want to have. Because in the beginning, it's going to be normal for you to, be a bit hesitant with your entries, be a bit hesitant with your exits. But that's also why, going back to slide 5, taking action is going to be very important, because the more you simply take action, the more you will literally understand what to do. And that literally relates to this. The more you are on the charts, the more your psychology/emotions will simply get built up. Now, moving on to the next slide. This is going to be building a strategy, or just building a set plan for yourself. Now, I can't give you a set amount of rules or a set strategy that you can, use, because realistically, every trader is different. You guys can trade the same strategy that I trade, but you'll still probably have a few tweaks within that strategy that is set or fit to you, right? Every trader always, or every successful trader at least, always builds a plan or builds a strategy that is fit to their trading style, right? So you as a trader, you need to understand what markets you're trading in, what kind of trader you are, whether you're a day trader, a scalper, a swing trader. You need to understand those things. And once you understand those small things, that's when you take that into consideration to building your trading strategy/plan. I also have various different videos in terms of how you can do this, and also a video on my exact strategy, but I will be going over it, very briefly in a little bit. But this is going to be one of the biggest things, because your strategy/your plan is what you are going to be using every single day. So you want to make sure that you are confident in this. You want to make sure that this is something that works, and you want to make sure that this is something you have obviously tested. Because the more you have tested it, the more you are obviously going to have confidence in it working. If it's something that has obviously worked in the past, then you're like, okay, I've done a shit ton of back testing. I've traded this model/this strategy a shit ton of times. So I know how to, kind of get my way around things, right? That just simply goes back to what I keep saying, is just taking action. The more you simply do things, the more you're simply going to understand how to build things that are fit to you. And it's going to be completely normal for you to be jumping around, maybe from strategy to strategy, especially in the beginning, right? Because you want to test different things to make sure that what you are doing, the way that you are trading, is perfectly fit to how you want to trade, or the trader that you are, right? Because you can be trading some type of strategy, and that strategy may be successful, but it won't be successful to you as a trader, because the way that you trade, or the markets that you trade in, or the specific times that you trade at, just don't match that strategy, right? So that's why it goes back to what I was saying earlier. First, understand the small things before you do this. But for the people that don't know me, I have been trading with supply and demand for years. You can go back on my YouTube channel and see that a lot of my more older videos are going to be me covering, me teaching supply and demand. So this is something that I have been trading with and that I have been refining for literally years, right? The same concept that I've been trading, but over time, I've kind of added a couple of things. I've realized a couple of things that haven't or that weren't working the best for me, so I cut them out. Over time, I would continue to understand what was working best for me, what wasn't working best for me, and then I would double down on my benefits and I would cut out my negatives, right? So that's also why as you take action, as you actually do this shit, you're going to understand what actually works for you. But the only way you can understand what works for you and the only way you can do it successfully is by actually doing it in the first place. How are you going to know what to do? How are you going to know what fits you if you're not even trading, not even trying in the first place, right? So that's going to be another huge thing as well. But supply and demand, supply and demand, supply and demand, I'm going to preach it. It's literally the main fundamental drive behind all price movement. And it's also very simple to understand, basic economics, right? You want to understand where there is highest supply on the charts and where there is highest demand on the charts. Demand obviously being a certain price area where the institutions, banks, they are loading up slash excessively buying in within that area. And if those banks slash institutions, which are the market makers that trade with millions, if not hundreds of millions of dollars, if they're entering within one area and entering heavily within one area, what do you think is going to happen? That's where volume, that's where high momentum is presented. When we have those areas of large amounts of buying or areas of large amounts of selling. So that's how we find large amounts of buying, is by finding areas of high demand. Now, areas of large selling, that's where supply comes in. That's where we see areas of supply. Areas of supply are pretty much where price gets to the highest point possible, also considered as a price premium. So, for example, if your position gets to the highest point possible, or it just simply gets to an expensive point, you're going to want to sell it, right? You're going to want to cut it off. And if we have the institutions slash banks all selling, all exiting in one area, that is going to cause volume slash high momentum being presented within that area. So that is why supply and demand is very important. And that's also just like a quick breakdown of how it works. High supply on the charts, high demand on the charts. Obviously, you want to spot those two things first. When you have those two things spotted out, it gives you a lot better of an understanding and confirmation of what you can actually do moving forward to take the best entries and exits. Now, moving forward, risk slash size management. We covered this in the third or fourth slide or whatever the case may be. This is going to be very important, especially when it comes to your size management, because a lot of traders, especially in the beginning, they enter with incorrect sizing. Meaning, let's say they have like $500 in their portfolio, they'll enter one trade, and that trade will have like $450 in it. They'll enter with like $400, which with a $500 account balance shouldn't be the case whatsoever, right? They're entering with what, 90% of their portfolio balance, which you don't ever want to do. You always want to make sure that, especially when you're trading options, you are never putting more than 50% of what's in your portfolio balance into a trade. So let's say you have $1,000 in your portfolio balance. You never want to put over $500 in a trade, right? You always want to make sure that you are only putting a small percentage of what's in your portfolio balance in your trades, if that makes sense. Because if you are putting too much in and that trade goes against you, then you just get screwed, right? Then you're just having big losses. And you want to make sure that when you do have losses, because losses are normal, it's bound to happen as a trader, but you want to make sure that when you do have losses, they are cut, they are minimized to the best point possible, right? You want to make sure that your losses are always very small. It's that one saying that everyone says, you want to make sure that your losses are smaller than your winners, or your winners are bigger than your losers, right? That's the biggest thing. And that goes to your risk, right? You want to make sure that you're simply just entering in, or you're simply trading with what you can afford to lose. And the way you can do that is by only entering in with a portion of what's in your portfolio, right? Only entering in with what you can afford to lose. Because if you have $1,000 in your portfolio and you're entering a trade that costs $900, you are not trading with money you can afford to lose, right? You're not. You're simply not. You are just pretty much full porting at that point. So that's why understanding things like that and understanding how to correctly put your money in the first place is going to be very, very important. Now, moving on to slide number 10, or the next slide. This is going to be fundamentals / news. Now, understanding the fundamental side of things, the fundamental market, is going to be incredibly important. This is going to be another resource or another tool that you're going to want to get extremely comfortable with, because initially or realistically, this is also what's going to be moving the market as well, is fundamentals, is news, things like that. Understand that the stock market is moving based off of real life performing companies, real life economic performance, right? So whatever's happening out in the economy, whatever's happening within certain companies, that's how the market moves, right? So us as traders, we want to make sure that we are familiar, we understand news, and we understand certain things that are going to be moving the economy / moving these companies. Because if we are not aware of it, or we are not aware of when they are going to be talked about, then that gives us a huge disadvantage. Because keep in mind, when there are certain news events, or when we have like earnings is when a company announces how their company did within the past couple of months, like company performance. When we have things like that, that moves a stock price significantly. So we always, as traders, want to make sure that we are aware of those things. And as I was showing you guys earlier, that's where Forex Factory is going to come into handy. I know it's called Forex Factory, but it's also going to show us news for the stock market. But you want to come and filter it out. You click on this filter button, and then there's going to be all these currencies. I only have USD marked out because realistically only US news is what's going to be moving the stock market. Obviously not like Europe or Canadian news. That's going to be irrelevant to the stock market, right? So we only want to be focused on US news. So obviously once we have that up, then Forex Factory is going to let us know these certain data events or certain news that we have within that certain trading day, certain trading week, whatever the case may be. I, every single morning, am in the Discord doing pre-market review, sharing my game plan with you guys, and kind of going over, my analysis / giving out my pre-market review, kind of letting you guys know what I'm eyeing for the day and going over the news to make sure that we are as prepared as possible. So if you guys are not in the Discord, I highly, highly, highly recommend locking in with a winning team. I don't know what you're doing if you're not in already, but every single morning I am doing pre-market review, like I mentioned, where I'm sharing my analysis slash game plan for the day. And of course, I am live trading, where you guys will get access to all of my trades slash what I'm looking at slash entering in within the market at real time. And also, you guys will get access to a ton of other exclusive education slash material and so much more. There's so much that is included within this community. So that's why if you guys aren't in and you want to take trading seriously, this is the place 100%. So go ahead and click that link in the description to get started, and I 100% look forward to seeing you guys there. But that is going to wrap it up in terms of, you know, the Forex Factory kind of section side of things and the fundamentals. So moving on to the very last slide, which is going to be once you have all 1, 2, 3, 4, 5, 6, 7, 8, 9. Once you have 9 of these things down and pretty much locked in on, you're comfortable with everything, then at this point, you just scale. You just repeat the process. You repeat all of these tools, all of what I just went over. You continue to repeat it, continue to get yourself more familiar with it, more comfortable with it. And as you're repeating this process, as you're continuing to just take action, get better, then you just scale up and scale up. And the way and the time that you know that you will be ready to scale is when you as a trader feel comfortable with your current position sizing. I get asked all the time by different traders or different students when they should scale up, when they should start to put more money into their trades. Because the more money you're putting into your trades, the more profits that you're going to make on that trade, but also the more money you can lose on that trade. So you want to make sure that you're very careful with this, right? But as a trader, the time that, or I'll word it like this, you know when you will be ready to scale up as a trader. You yourself, you will feel it, you will understand it, and you will kind of go through the beginner side of things. And once you go through all of that, once you know as a trader that you went through all of that, you got yourself familiar and comfortable with the base, then you start to scale up. Then you start to consistently put more and more into your trades or buy more and more contracts, whatever the case may be. Then you start to scale up. So that's going to be that. I'm going to go ahead and wrap up the video here. I hope you guys enjoyed. Hope you guys found value. If you have any sort of questions or whatever the case may be, please feel free to leave a comment below. And of course, if you guys are not in the Discord, you're not in the winning team, go ahead and click that link in the description. Get access to daily pre-market reviews where you guys will see my game plan slash analysis on the day. Also get access to live trading with me slash a ton of other exclusive education slash material. Other than that, you guys are the best. Go become some snipers on the charts, and I look forward to seeing your guys' progress. Much love. I'll see you guys in the next video.